Hi guys, and welcome to our weekly review video. And today we're going to discuss further, or in fact talk a bit more in regards to what dollar index has achieved since our last week's weekly review video. So when we look at the chart, before we go to the calendar and the COT number, when we look at the chart, the technical chart for dollar index, you can clearly see we had 93.46. Let me just zoom out a bit. Now 93.46, this is a level in price which I clearly emphasized that we should be in a position to benefit from price trading to that level. I anticipated price to find support, and that's exactly what happened for the past week. It happened 3 times. Price came in, found support, probably because of positive fundamentals, and wait again. Price came back to 93.46. We couldn't break below, found support and trade to the upside. And recently, today, price came back again, and this is right around 8 a.m. this morning. That was London open session. Price came back and found support. So what does this mean? It means you should have been in a position to benefit on your shorting positions on pairs such as Euro USD, Pound USD, Aussie dollar and NZD USD, and you should have been in a position to benefit on long positions on USD CAD, USD CHF and USD JPY. Particularly USD JPY, it offered great long opportunities. So there are many other pairs that you could have benefited from price trading to 93.46. Pairs such as the yen pairs, any major currency paired against the yen. So we're talking of AUD JPY, NZD JPY, CAD JPY, GBP JPY. You'd have been using institutional pairing there in dollar strength, whereby you'd have realized those pairs trading to overbought scenarios, price trading into premium, and they did find some resistance and dropped to the downside the moment dollar was trading to 93.46. So that's basically what happened, what transpired last week, how we benefited from dollar trading to 93.46. So now looking at the week ahead, right, the current week which has started right now, when we go to the calendar, right, we've got Monday. New Zealand was on holiday today, it's Labor Day. And then we had some pretty bad news for the euro. That's the German if for business climate. They didn't come out really that much good. And then tomorrow, Tuesday, the main fundamental on the calendar tomorrow is the new home sales and the consumer confidence for the month of October, new home sales for the month of September. So depending on what number comes out, whether it's a positive number or a negative number, by now you should know how to react. We're going to talk about this when we go to the chart. Then we also have some trade balance for NZT. That's later in the day when New York is closed already. Then Wednesday we've got CPI release for Australian dollar. Early morning, 2:30 a.m. we've got CPI release, and then 2:30 in the afternoon we've got core durable goods orders for the United States for the month of September. These ones are definitely going to move the markets. And then we've got Bank of Canada, right? Now take note, I emphasized this in class and I did also emphasize it on the group. We've got quite a few central banks on the calendar this week, followed by Federal Reserve next week on the 3rd. That is, I think, Wednesday or Tuesday next week. I haven't checked really, but I think it's the 3rd. So we've got quite a few central banks on the calendar. That's one thing to take note of. So Wednesday, we've got the first central bank on the calendar, which is the Bank of Canada, right? We've got interest rate decision for the CAD. Then at the same time, we have crude oil inventories, and then the press conference. Definitely, when you look at a pair like USD CAD, you should see huge volatility coming into USD CAD. Now, Thursday, we've got Bank of Japan, right? Monetary policy, and then that's around 8:30, heading into 5 a.m. Just towards Asian close. Then on the same day also, we've got ECB, the deposit facility rate. These are very strong fundamentals, guys, and what you need to understand is how the number affects the euro. We also have the ECB interest rate decision for the month of October, right? Then later on during the day, that's Thursday, by now you should know initial jobless claims. These ones, they come out every Thursday of the week. The same time we are having initial jobless claims, we've got GDP for the United States. Now this one is crucial to the way dollar is going to close the week. Then we've got also pending home sales. Then Friday, we've got retail sales for the Australian dollar, and we've got inflation news for the euro. That's around 11 a.m. So these are some of the major fundamentals that I specifically will be looking out for, because these are the fundamentals that are going to affect what? The major currencies. Now, when I look at the COT report for the dollar in particular, right, I can see that the non-commercials, right, the non-commercials, these are the hedge funds, the banks, and the institutions, they have taken profit, right, on both sides, on their long exposure and their short exposure on the dollar. They've taken profit, but most importantly, they've taken more profit from the what? From the short side. You can see here, they've taken off roughly about 2,600 positions from their short exposure, and they've taken just about 1,800 from their long exposure. Now, when you look at the commercials, now these are the corporations that hedge against the non-commercials. We've got their long exposure. It didn't change much. They took profit just about 27 positions. That's nothing. There's no difference there. There's no change in their exposure. Same applies to their short exposure. They've added just 9 positions from 44,823 to 44,832. So they take a slight profit. They took a slight profit. They reduced their long exposure on dollar index. But now when we look at open interest, it has jumped just about 3.35% from last week's number by 2,100 points. That's not much of a big jump. But when we look at the exposure now, right now the commercials, they're net short 42,728, and the non-commercials, they're basically net long. The non-commercials are basically net long on their exposure. So how then do we transfer this data to give us a certain help in our bias on dollar index? Now this now comes back to your technical chart, like your levels that you're looking at. Then you combine that with the fundamentals on the calendar. Like for instance, tomorrow, right? Tomorrow is Tuesday. Tomorrow, Tuesday, 4 o'clock, we've got new home sales. We've got the CB, consumer confidence. Now, if you want more information regarding this fundamental, you just have to click on the fundamental and you get to read what it can do, right? Now, once we have this new home sales release, right? Estimate we are looking at about 760k. What if it is negative, right? That means anything less than 760. And you look at your technical chart, you already have two levels that you have to look at. One is 93.74, the second one is 93.46, right? If it's a negative fundamentals, expect these levels to be broken to the downside. But if it's a positive fundamental, expect these two levels to provide support, right? If it's a case that there's a rally to the upside in dollar index, if it's a case that we see a rally back to this bearish order block, right? By the time we are trading to that and we have those fundamentals, then you expect, if it is a negative release, you expect price to find a ceiling, resistance, and drop to the downside. I'm not saying you're gonna get a negative or a positive fundamental. We just have to see when the number comes out. Then we have to know how we are going to trade dollar onwards from that time. Now, in terms of directional bias, right, on dollar index, I'm still bullish, right? If you remember in the group, I emphasized when we go to the monthly chart, 93.78 and 95.32. So 94.78, 95.32. Those are my targets for dollar index in this last quarter. I'm expecting a push to the upside on dollar to reach to those levels. Only then, when they trade to those levels, I'll be looking for bearish momentum or another continuation to the upside. Now, we had Powell on the calendar on Friday, and he emphasized the Federal Reserve's stance on tapering, and I'm sure next week during FOMC we're going to get more of that, and I'm sure the Fed is now beginning to start their taper program, and this is gonna help push dollar to the upside. We can already see how that helped dollar last week, Friday. I'm just gonna go to an hourly chart, right? Hourly chart. So this is Monday, so this is Friday. Powell was speaking somewhere around this time, 1800 hours on Friday. So that was Friday the 22. Let me just take a look so that I give you guys an example of what I mean when Powell is speaking. Right, so Powell was speaking right around 5 o'clock, right? And his message in this press conference, or I don't know whether to call it a press conference, but he was speaking, right? During that time, Powell emphasized the time frame for the Fed to start their taper program. Now, that time dollar was trading right around 93.50, just shy of our level, 93.46, right? But when you look at a price, when you look at price action as a technical trader, the moment price dips down to your level, there's always emphasis of a PD array on the left, right? We've got this bullish order block, and when you're speaking, price actually rallied 23 pips, right? And you can see what happened today was basically accumulation, right? We had price taking out Friday's low, right? So this was accumulation. Let me just highlight it for you so that you can see clearly. So that was accumulation, market pushing to the upside after a sell stop raid, right? So this price action here, this price action, that's the accumulation that you'd have been looking for price to trade below last week's Friday's low, and then we had a further push to the upside. So this would have been your trade on dollar index, and that trade on its own would have resulted in this. On Euro USD, you can see Euro USD, we had accumulation here, right? We had accumulation here, price trading above Friday's high, right? Friday's high, taking out the buy stop. That was a buy stop raid of Friday's high, then push to the downside. Your trade would have been this 61 pips. Now, why do I have to emphasize that? So when Powell was speaking, he added more confluence to why the Fed should begin their tapering, and same applies during this week and leading into FOMC. We should get more news, we should get more releases, we should probably get more positive news, more positive fundamentals coming out from the United States that are going to give them more emphasis to say, okay, they're gonna start their taper program. So right now the bias on dollar is still bullish. I'm still expecting dollar to trade to the upside. The only thing that's going to make me change my mind here is negative fundamentals from the United States. Say some numbers miss the expectations, some numbers miss the forecast, then yes, I will be applying my technical analysis to trade to the downside, but with the higher time frame bias of heading back all the way to 95.32. So basically that's how you have to look at the market from now onwards up until the end of the year. You really need to put fundamentals into perspective. They've become very important now because they're now driving the market. So you need to understand what the fundamental says. So now when you look at the daily chart for dollar index, you can clearly see we've got this here, this level here, equilibrium coming in right around, I'm just gonna say 94.20. I'm expecting dollar to reach for that price sometime during the week, and only from there then we should see maybe a bit of resistance before a further push to the upside next week during FOMC. So new home sales, they're the key to a dollar rally this week. But if those fundamentals come out negative, right, the new home sales and the consumer confidence fundamental, if those come out negative, then expect a drop to 93.46. Only from there now we have to be in a position to react to the fundamentals that are coming and linking it now to the chart. So if it's a positive fundamental, when price comes to 93.46, we should see support and rallies to the upside. But if it is a negative fundamental, then you expect this level to be broken to the downside and probably all the way back to 93.05. Now that would be a very huge weakness in terms of dollar index. What you can see right now, fair value gap, this fair value gap here has finally been closed, right? And we had a bit of consolidation. Now that consolidation, there is an expansion inside there. Let's go to H4. Right, you can clearly see this is the consolidation. We've got this expansion here. Let's go to H8. You see, we've got this expansion here. Now, this order block that has been left by the expansion, where the consolidation, expansion, price giving us signs. This is price action showing us its willingness to go to the upside on dollar index. See, this candle basically is a breaker. It is broken out of the consolidation. You can see dollar was consolidating from 18 October up until now. There's a consolidation. Now this expansion here, once price fills up this fair value gap, right? Once this fair value gap is filled, then expect price to find support, and then what? And then it's gonna trade to the upside. Once price comes inside this range, you should be hunting for longs on dollar index with your target 94.20 to fill up this fair value gap. So that's how you have to look at the market structure, and then you combine that with the fundamentals that are going to come out. So with central banks, with quite a few central banks on the calendar, right? These central banks, they are going to do as much as possible to support their economies, right? They are going to do as much as possible to support their economies. Meaning, for example, Euro, ECB is on the calendar. They're going to do as much as possible to support the Euro zone. And if they come out with positive news during their policy statements, right, that's only going to result in weakness on dollar up until we get FOMC coming in on the 3rd. You see, up until we get FOMC on the 3rd of November. That's a week from now. So take note how the other central banks behave. How do they tackle their quantitative easing programs, their tapering programs? But if we do get negative sentiments coming out from those central banks, then there's nothing that is going to stop dollar rallying. But right now, dollar has already shown us its willingness to go to the upside. That's why I mentioned in the group, I'm going to be looking for shorts on what? Majors against dollar, longs against. I'm going to be looking for shorts on majors against the dollar, and I'm going to be looking for longs on dollar against the majors. That's to say USD JPY, USD CAD, and USD CHF. And then for the shorts, Euro USD, Aussie dollar, NZD USD, and Pound USD. So yeah, I hope I have elaborated a bit further in order for you to understand how you can trade during this week, and I hope it's going to be fruitful for you guys as much as it was for me the previous week. So yeah, if you haven't joined the mentorship, guys, you're only gonna see this video I think Wednesday or Thursday, just before New York open. So yeah, by that time I'm sure price would have already moved and expanded for the weekly range. But if you're in the mentorship group, you're going to receive this video just now before New York close. So yeah, if you haven't subscribed to the channel, guys, just make sure you subscribe and click the notification icon so that you don't miss some of the videos that I upload. You get them straight into your inbox. So yeah, with that, I wish you guys good luck and happy trading. Thank you.